Well, several national lenders are suspending their foreclosure procedures in 23 states because of some tainted foreclosure processes. Hundreds of thousands of homeowners might be affected because of a procedure called robo-signing. Here today to tell if Florida is one of those effective, what it could mean to you if you're buying or selling. Real estate contributor Denny Grimes is with us this morning. We always thank you for coming in, Denny.
My pleasure.
This just popped up where all these banks are basically kind of putting a hold on the foreclosures because the documents were not perhaps signed correctly.
Yeah, a couple of weeks ago it came to somebody's attention. I don't know how long it's been going on, but evidently there is a law that says that before someone can, the lender can take back the property, someone has to specifically review the file to look for the payment history, if there's the right fees are being charged, etc., and then be willing to state under oath that they've done that. Well, they discovered, someone would have to be a super graduate of Evelyn Wood's speed reading class because they had found that people were doing thousands and tens of thousands a month. It was just totally impossible for somebody to actually review the documents. So from a technicality standpoint or legal standpoint, there are now a lot of the major lenders, three in fact, GMAC, Bank of America, and of course Chase started it, have basically suspended their foreclosures. And I think you're going to see more lenders probably hop on that bandwagon.
Yeah, it's happening here in Florida,
yes.
And it's got an impact on owners that are trying to either keep the house or get rid of the house.
It really affects everyone in the transaction. First of all, for the sellers, the people that are in foreclosure now that still occupy the home, they may get a temporary stay of execution. It probably won't be a technicality where they'll throw out the foreclosure, but they probably will get maybe a 30 or 60 day, maybe 90 day.
A little extra time.
Extra time before they're evicted. That could affect the tenants. It also affects the buyers because many closings that were scheduled to take place this week now have been put off rather indefinitely, and these folks are coming down or have their moving trucks doing circles in the cul-de-sac, and there's no home to put the furniture in.
Yeah, that'd be a tough spot if you thought you had a deal on a house, and in the last couple of days you hate it when it happens, especially if they're out-of-state buyers. And then there's an impact, you tell me, on the agents as well who are kind of counting on these closings.
Well, 70% of our business is right now distressed, either short sale or bank-owned, and this is really affecting the bank-owned, not the short sales as of yet. And I know agents that had 4, 5, or 6 closings scheduled in the next month, and now those have been put on hold. So that does affect their cash flow and their ability to buy their groceries, etc. So it all filters downhill. Now, there may be some good news in this whole situation because in the mortgage modification, which has typically been a rubber stamp no, they might be discovering that the process has not been properly administered, where people really weren't reviewing the files as necessary. And if they can slow down and take a look at that process where more people their mortgages can be modified, where more homeowners can stay in the home, this could be a positive thing. But for the next 90 days, it's going to be, if you're looking for a foreclosure, you may want to make sure you have time to wait, just in case it gets prolonged.
Yeah, we're in a holding pattern at least, and you think it could expand out to more of the lenders?
I think so.
All right, Denny, thanks for coming in and keeping us up to date on what's happening in the real estate market. We'll be right back. You're watching Week News Now this morning on 6 TV.